do we have a uniquely positive backdrop for stocks?
Yeah, I still think so. I mean, maybe we've pushed out the timing of rate cuts a bit, but the fact is we're in a healthy nominal GDP environment, right? We're talking about 5 to 6% nominal GDP this year. In the prior cycle, we were under 4% on average, and that's a good environment for earnings, and we just saw that this earnings season, best one since 2021.
How big is that window? Lisa talked about the new normal, maybe even the old normal, going back to where we used to be 20 years or so ago. What is the new equilibrium, if we can call it that?
What's the new equilibrium? So I think where we are now is essentially the new equilibrium. I don't think we're getting back to 2% or below 2% inflation on a sustainable basis. I think we'll be somewhat above. 2% was more the ceiling of the last cycle, and it's going to be probably more of the floor this cycle. But that's not such a bad thing. I mean, I know that the Fed is talking about we have to get back to 2%, but I think there's a little wiggle room there. I think when it comes down to it, if they say that those last few tenths of a percent are worth destroying the labor market, they will hold off on that, and they're going to be very sensitive. If we start to see the labor market crack, they'll be sensitive even if we're not quite at that 2% level.